The following is a presentation of TFNN.
Good afternoon, everyone, and thanks for joining us on our October 24th live webcast version of Celestial Charting Mastering Probability. And so we'll go ahead and get right into it. If you have some questions, feel free to go ahead and use the den area down at the bottom to go ahead and type your question in. And for all those that are listening in on the archive version of this, feel free to follow up with an email, or, as always, you can reach me in the office anytime. This is the next set. I will try to maintain the every other Wednesday. Apologize for last week and the week before. So the next one, 2 weeks from today, November 7th, then the 21st, December 5th. Wrapping up the rest of 2012 with December 19th, and then I will go ahead and skip this. So December 19th, then we'll go 3 weeks because January 2nd is the following session. Areas that I would like to cover with you today, we'll take a look at the lunar and astro cycles currently on the horizon. I want to take a look at one of the tools from a momentum trading standpoint that I taught at the workshop that I did last week for the candlestick charting. For all of those that attended, thank you very much. If you do have an interest in watching that workshop, I can still find a way for you to sign up. There's not an actual sign-up page, but you're welcome to do that and sign up and have access to it for 30-plus days, and great education. I'm going to use one of the elements that we talked about during the workshop, which is the rising and falling three. It's momentum plays. So I'll show you how you can use it in different marketplaces. I have, I believe, some intraday charts on Apple, some currency charts, the euro, maybe the Japanese yen, a couple daily charts on some equities, and if we do get a bounce in the more than a bounce, if we get what I do believe, as I've put in the newsletter, is that the market will move down into Friday or Monday, most likely Monday. If the market does move down pretty well into Friday, we will take a portion of our positions off the table on Friday, and if the market does move down on Monday as well, we'll go ahead and take the rest off and flip and go long. Of course, we'll be looking for some type of candle signal, divergence, or otherwise, and then during the period where the market would be moving up, one of the things that we'll be looking for is the rising three method for going ahead and taking a look at some momentum plays in the marketplace. So I thought that since that's one of the things that I'll be looking for on daily, weekly, intraday charts on some equities, I thought I would go ahead and share with you the principle behind it. And that way, for any of you that might trade intraday or just simply, you'll be able to take a look at candles and what follows to get an idea of what might be going on with something that you're trading. We'll take a look at the current trades today. At the present time right now, coming into the little past 3 o'clock, we've got the Dow's now trading down 26 points. So I was expecting a bounce today, just simply a one-day bounce because of the trend index reading, and we seem to have gotten it, but there's still more intraday-wise, and there's still more time in the trading session. So we'll see what happens. We'll take a look at our current trades that we have. We'll look at the 30-minute futures contracts, some pattern updates to the newsletter, and search for new trades. I didn't get a chance to really do that, so probably won't have time to do that, but then take whatever questions and answers, questions that you have, and I'll try to provide answers. The last lunar cycle that came in for us was perigee. That was on October 17th. The time frames that are inside the newsletter, the time frames here, are ephemeris time. Since we're on daylight savings time, you would back that off. So it was Wednesday, October 17th. For those of you that are new to the workshop or new to the newsletter, there are, if you go look at Celestial Charting in the archives, there's probably a good 20 hours worth of shows that you can go back. We have covered perigee and apogee and how to trade that. I'll cover that just briefly here. And that is, again, it came in on October 17th at 50 past the hour ephemeris time. In order to get back to Eastern Standard Time, you would back it off 4 hours. So 8:50 p.m. You see it notated on the ES mini chart that I include in the daily newsletter. And the trading principle behind this, and it is certainly one of the best, absolutely one of the best indicators out there that you won't find it on a charting platform, is apogee and perigee. And when price moves below either of those two, you want to go short the market. When price is above it, you want to go long. So, and if we do take a look at this, and I'll speak maybe just a little bit about this here. This is another tool that I showed inside the shared. We spent some time on in this last Friday's workshop, which is this little sideways box consolidation. That is this little pink area here. And when you do see those, in this case here, it was moving sideways and really some small bodies inside here. And and especially as you're coming into a perigee phase, or an apogee phase. In this case here, it was perigee, and the market broke below that. My expectation was the market was going to break below that. Typically, when you have a consolidation sideways box, the market is just it's a continuation move, and that's really when we take a look at the rising and falling three methods today. That's really a continuation move. And so here you've got a sideways box, a continuation move to the downside. I was moving down into it, and this is approximately where we were probably about a couple of hours ago. So long when price is above perigee, and short when price is below. Now that we're below, we're looking for different patterns to complete here. The next cycle that we have is coming into Monday, so that would make it at about, 15, so it'll be 3:50 in the afternoon. But unlike perigee and apogee, where I mark them exact on a chart in the ES Mini, in the futures contract, the full moon cycle, just because it's coming in at 4:51 in the hour, 3:51 in the afternoon, it would 3:51. It doesn't. I haven't found any relevance there in trying to mark an exact full moon or new moon. So it does come in on Monday, and I expect that's when we will see a market low. What I have done here is I've just marked up the full moon, new moon, the chart that I have been including in the daily newsletter. But what I've included here is I've included the reversal duration periods. What I mean is when as an example, and I'll come back here to the full moon. So we'll just start right here in the June 4th area with the full moon moving down. And counting the full moon day, I just simply counted the number of days up during this cycle. So if we started from here, we went all the way to the June 19th new moon, there were 12 sessions, trading sessions within there, and this just simply moved all the way up into it. Then from the to make the highest high during that time period, from June 19th when the new moon came in down to the lowest low in that time period, including counting the June 19th day, there were 5 sessions, 1, 2, 3, 4, 5 when it made its low. So there were 5 sessions. And down here is a summary that I put together of both the new and full moons, because they act, again, as short-term trend indicators. Now, one could argue that the June 4th full moon lunar eclipse certainly has acted as a longer-term trend indicator, but I'm just simply going in between cycles just to see if there was any pattern there. And the one pattern is that the minimum cycle time period, including, again, the day of the cycle low or cycle high, is 4 days. So the correction period at a minimum is 4 days. And again, 13 periods does not make up a great sample size, but I just simply went back. So with regard to what we would show on a chart, and you can go, this is a tool that's very easy for you to go and do and count in between the time periods to get a larger sample size. But what we can expect is a reversal from 4 to 12 days, the full cycle out there. Now, what I do expect, and of course, we'll play this one day at a time, but right now I'm looking for the market to move down into a full moon. These full moons and new moons have acted very good as reversal indicators. And my expectation is that we'll see the full cycle. And part of that is based on the election cycle that also is out there. And it's not unusual during an election cycle to actually have a pullback right now as we're having. So everything is actually working out very well from a timely standpoint. And so those of you that are familiar with election cycles, this is really not uncommon. And then coming into this full moon, we know that these new moons and full moons have at least marked short-term trends, changes in reversals, changes in trend. Obviously, we have the market moving down into Friday/Monday. That being said, if this election cycle is like the other election cycles, the market will actually move up through the first week past the election cycle, which would be moving up into the next new moon. At a minimum, we should see a 4-day reversal, and as I said, we'll just take things certainly one day at a time out here. The next phase that will come in is on November 1st. We have the apogee. This is where the moon is furthest from us. So this will be what you'll want to mark on your ES Mini if you do follow that, and you'll want to go ahead and mark the actual Thursday. So at 10:30 in the morning. Now the reason here it's 5 hours is because I believe we go off daylight savings time, October 31st. But I could be wrong on that. I don't know if they have. But I think by then we are off daylight savings time, unfortunately. So I have marked it would be a 5-hour time zone difference versus the 4 hours here. And so you'll want to go ahead and mark that at 10:30 Eastern Standard Time, or whatever the time frame is on your chart. And then after that, we've got the November 13th new moon, and it's a combination of new moon and a solar eclipse. And that's when I expect that we will see the next market turn. So I'm looking for this to go the full cycle. And if we take a look at the full cycle, what we can also see as I go back here, that there were 13 periods measured. 11 went the full cycle. Really, there was... 3 went the full cycle. There's 12 days. 1 went 11 days. But during this period here, there was actually a holiday. And so there were really 4 out of 13 times where the table was run in between the new and full, or full and new moons out there. So that's what the current outcome is that I'm looking for. If I do take a look at just simply the most recent full moon, new moon combos, we have 2 more, the one that I just mentioned, November 13th, and then we have 1 more coming into the end of the year, November 28th out there. And I expect on the November 13th one to see a pretty good drop. At least that's what the Commitment of Traders data shows out there. But again, we'll just take things one day at a time, and then we'd be looking at, so it doesn't look like at this stage much of a Santa Claus rally. But again, we'll take things one day at a time. There are no more remaining P-index dates, I believe. I think I've caught them all. The last one was October 6th out there. It was a 2 planetary index date, which is very unusual. I had gone, and during that time period, I went back and took a look at the 2 P-index dates, I believe, going back into the middle 90s, and laid those over a weekly chart versus a daily chart to identify whether there was any consistency in identifying any kind of longer-term trend changes. And there wasn't anything that I saw from a longer-term trend change. And we did have one that came in on October 6th that has started the trend. I'm not saying that was the fuse out there, but we can see where that is identified on the chart. The market has moved down, and so it makes sense to me that there's nothing here that indicates that it is a long-term trend change. And so, therefore, moving down into the full moon coming in next Monday would make sense to me. The major aspects, this is a page that's included inside each of the newsletters here. Nothing of real interest here to spend any time on. Today, this is as you are well aware of, this is the summation from many books that I've read on taking a look at planetary cycles and their impacts on different markets. And this is a summary of when those planets line up with each other and where you should be looking for possible changes in trend out there. I don't want to spend any time on that today. What I did want to do is I did want to get into what's referred to as the rising 3 and falling 3 method. So these are methods that you can use as momentum plays. So typically, when we take a look at some of the patterns that we trade or that I trade, we're looking to identify reversals. And those reversals are trying to call market highs or market lows. And so that being said, there's going to be a difference between us perhaps going long or short and the market posture that I contain in the newsletter in the upper right-hand corner each day with regard to the S&P 500, where I show long-term, intermediate term. Long-term is, in essence, on a monthly chart. Intermediate term, in essence, on weekly time frames, and short-term being daily time frames out there. So there are instances where we're short the market, yet the market posture identifies it as being long, and that's just simply because of the tools that I use to determine whether it's bullish or bearish market, but we're trying to pick a top, in this case here, in order to reverse, and so there will be sometimes that difference inside the newsletter. That's one way of being able to identify trades and take trades. There's also the ability to use tools that are continuation moves, much like the sideways consolidation box that I was showing. And there's ways to determine approximately what the reward to risk is. So what I'm going to be sharing with you and discussing with you today is just taking a look at some of these patterns here so that you can understand how to identify them, not so much with regard to how to determine the reward to risk. That requires taking a look at other patterns out there, but you already perhaps play or look for certain patterns, and so this is really an excellent way, and it works on all time frames. So you're going to see me using it on some different time frames, or the examples that I show you, and it works in all marketplaces. So I think I've got equity marketplaces, futures marketplaces perhaps, and currency. So the basic rule here is that in this case here, we're going to be talking about rising or falling. So in a rising three method candle pattern, the market is in an uptrend. In the first candle, in this case here, when you take a look at my charts, the first candle would be a green candle, where the market is moving up, and it would typically, you're looking for a long real body. You're trying to find as long a real body as you can out there. And then what occurs is there's a series, even though it's referred to as the rising three methods, that's just the name of it, because when I take a look at followed by a series of small bodies, it can be really up to 5 bodies. Now, what I do want to say is that 5 is a guideline. I'll show you an example, or there may be an example here where there might be 6 to 7. And for me, that still qualifies. I'm giving you the technical, and then from a trading standpoint, I'll go ahead and expand it because it's really just a guideline. And what you're really looking for is a series of small bodies that are just simply going to be contained within inside the original candle. And that's really what it is that you're looking for. So the key is to identify small bodies, spinning tops perhaps, dojis, but pretty much small type candles. The smaller the candles, the better off the continuation pattern is. The reason is because if you take a look at it just simply from a psychology standpoint, you've got the market that's already in an uptrend. That's what this green arrow in essence is referring to. You then have a wide ranging bar session. And again, doesn't matter intraday or daily, but you have a wide ranging bar session. And then on the pullback is nothing more than normal, just working off some of the energy that it spent during that upthrust here. And so pulling back within the same candle is not bearish, no matter what color the candles are. And then finally, where the continuation pattern is, in this case here on the rising three method, is you would get a candle that would close above the close of the first session that we're dealing with here. This being the first session, and so as soon as you get a close above that, that completes the pattern. And it does not have to be along the final candle that crossed through it. It doesn't have to be a wide-ranging candle, but it's nicer because now you're taking a look at continuation, right? So if you think about psychology, market's moving up, you have a nice upthrust, you're pulling back 3, 4, 5, maybe 6, maybe 7 sessions, okay, all small bodies, never breaking outside of the first candle. Could test the low, most certainly, but never closing below the first candle. And then vavoom, you've got a nice move up, and that is a continuation candle. And, it's indicating that the bulls are back in control. Now, this pattern here, both the rising 3 or falling 3, it's not used in any regard with regard to identifying support or resistance out there. It is nothing more than a continuation pattern in the marketplace. So here's an example. Here's a couple examples of a rising 3 method. Here is the ES Mini. This is a daily. You can see the market. This is coming off of the inside the June 4th lows here. The first time that a rising 3 methods showed up here. And this was obviously, you can see the market here in a sideways sideways to up consolidation pattern. So you've got one pattern right here, although it's not highlighted inside here. That certainly is what it is that you are looking at. You can see that in this case here, you have nice up thrust, and you're back with small bodies on the way back, testing the bottom but never breaking outside of this candle. 1, 2, 3, 4, fifth candle, boom, closes above it. It's a wide-ranging candle, and that tells you that you now have your momentum. So in this case here, there were really 2 patterns that were broken out. You had the sideways box. You had a little breakout here with this candle. Moves back inside if you had even gone long here because you played a sideways consolidation on this candle and you went ahead and went long on the close here. As the market is pulling back, you certainly would have been concerned, but knowing that you are trading with inside the body of a long-range candle wouldn't have you too concerned. In fact, what you would do is once you broke through it, that's assuming that you understood what other patterns maybe were on the left-hand side or other patterns that were in play, you could actually take a look at adding to your position. So here's a daily chart using the S&P futures. Here's Whole Foods markets. Using, again, a market is in an uptrend. If you go back here into this time frame, you've got a wide-ranging bar. It backs off. You get closes below. It backs off for 3 candles here. Boom, you come right through it. The market moves up. Very key in playing these momentum plays to understand where your logical areas of resistance are going to be on the move up and where other patterns are going to complete. And I'll show you a few of those. So the exact opposite, where the bear chase begins, is the falling 3 methods here. Again, just the opposite, where your basic rule is that the market is in a downtrend. The first candle is along down a red body, again followed by a series of smaller bodies, preferably as small as possible. Green bodies still maintaining and staying within the first original down candle. And finally, you've got one down candle that takes out and closes below the close of the first session that you started with. Again, not a requirement that it be a large body. Close below it just simply qualifies as the pattern. What I like is the longer the candle, the better. However, if it's a longer candle, and as the market is moving down into it on an intraday basis, if you have a real wide ranging bar, the market could move away from you, so you don't have the right reward to risk. So this, in essence, you may have to make an intraday judgment call and have the equity pick you up along the way and be willing to close it out intraday if the market really doesn't break below this area. So it just depends on what your day is like from a trading standpoint. And this works also in the currency marketplace. So for those of you that work, for those of you that work, you can watch for these patterns on intraday charts inside the currency markets because they present themselves relatively often. So the to enter, and I didn't see, Glenn, when you actually typed that up there, so I might have covered that, but you can enter at the close. If you're trading and the market is in front of you, what I would do is I would give it a little bit of room. And because you can get a wide-ranging bar, and all of a sudden you had the pattern there, you just simply you don't want to have to pay too much for it. Again, you are playing these patterns and you're entering at higher price because they are continuation patterns. But the benefit of a continuation pattern, and it really depends on how steep, how well the trend is, and also what it's coming off of, and perhaps it's a completed pattern. it is substantially harder, if you think about it, from a psychology standpoint. Let's say that the market really is moving down into Friday or Monday of this week. And, I promise you, if it is moving down and it does retrace as much as it should, just simply from a Fibonacci standpoint, from swing point low in June 4th to the high, in October, and it gets down to the 0.618, how many folks do you think you're going to be able to find out there that are going to, that you can say, hey, it's a full moon and it's a reversal? You're not going to find a lot of people that are going to want to buy the market because all the news is going to be pretty bad out there. Yet, of course, we know just simply by taking a look at just the lunar aspects alone, how well they have acted as a reversal time period. So picking highs and lows because you're really going against the tide is a difficult thing to do. However, continuation mode, the market's already in that trend, and all you're doing is finding ways to be able to add to existing positions, or you're not in a position, but you want to be in a position, and now you're just trying to find the pattern that gives you the indication that it's time to jump on board. So continuation patterns, actually, from a psychology standpoint, are easier patterns to trade, easier patterns to play, because it's a resumption of the move that's in place. Now, it's very helpful to understand what other patterns are going on because you want to make sure that the right reward to risks are in place. Here's an example of the following three methods. Here's a Dell. You can see you've got the wide ranging bar right here, 1, 2, 3, 4, 5, 6 session here. You get a close below. This one didn't work. But you get it closed back inside here. It didn't work. You do what? You close it out. Continuation pattern, once you've entered, other than coming back and maybe testing the bar intraday or what have you, but you get it closed like this, you're back inside it. It's very simple. The continuation pattern is not working. That's why you got into it. You just simply take your small loss here and you're on your way. If we take a look at Apple, here's an intraday chart. So I just simply picked a stock where there was a lot of volatility. So here's Apple going back just to the end of September, where I was able to identify just on one chart a falling 3 and a rising 3, so that it could be played really in both directions. So, here's your wide-ranging bar, 1, 2, 3, you get your close below here. Boom, you're into the session. Of course, you get into this session here in your momentum. Once you see this candle here, this is not a hammer candle, but you see this gets very close to a hammer candle. Too big of a wick here to really be a hammer candle, but certainly you can see that the bulls are in charge on this candle, at least intraday or towards the end of the session. The bulls actually came back. Market starts to move up. Here's a rising 3. You've got a nice fairly decent wide-ranging bar, just simply within inside this for a period of 3 candles. You get a close on this 4th candle, and boom, you're back on your way. So here's an example using just simply a 10-minute chart on Apple. Here's an example of Apple using a 10-minute chart as well, and 2 patterns. So we talked about the sideways consolidation box. Here you've got the market moving sideways. Market has started into a potential downtrend here. You've got 1, 2, 3, 4, 5, 6. Here's the 7th candle. So here's where you're using a combination of patterns. Just technically speaking, a falling 3, a rising 3. You're looking at 2 to 5 candles. In this case here, I call both the falling 3 and a consolidation that continues moving in the direction that it came from. And that's using, again, a 10-minute chart on Apple. Here's, again, the 10-minute chart on Apple. Here's a pattern that didn't work. But you can see here, you got a markets in an uptrend. You got a wide-ranging bar. You then have 3 sessions, 1, 2, 3 session. 4th session, you get a close above here. Let's just say you happen to enter at the end of the day. It moves sideways. Now, when it's moving sideways like this is telling you there's not a lot of momentum to the upside. You close right back inside it here on this session. Boom, you're out of the trade. It's really, and that's how you have to trade it. It's either going to work or it's going to fail. And on the failure side, either way, you're typically not taking a substantial loss. You can utilize, your 1% method or something short of that. You can use your stop. Again, this is not used. You're not using rising 3 or falling 3 whatsoever with regard to support or resistance. Support or resistance is going to come from something else inside a chart pattern. But what I can say is if you enter the trade and it comes back and it closes inside the original candle, just take your small loss and move on. If we take a look at I might have one or two more on Apple. So here's a falling 3. Market is moving down. Then you've got this candle here. You've got the sideways action. Boom, it moves back down and closes below. And that would be the use of a falling 3 candle out here. Here we'll switch over to the euro. So go over to a currency chart. This actually is live. So as I was paying attention to the euro on an intraday basis, here's an actual trade. So here's a beautiful trade. From so many of the things that I've been able to share with you through the 1-hour workshops that we do, here you've got a Gartley buy pattern. So it's a completion of an A to B equals CD. Your A point was up here, your B point down here, your C and D, and this was a 1-to-1. A to B equals CD off of the most recent low swing point. It also happened to be a 0.618 retracement right into this area. Now, if you, here's the bullish engulfing that shows up. So we're always looking for a bullish signal before we enter a trade. So you have a bullish engulfing, you get a little higher close, you get a nice additional confirmation here. If you missed this move, what this had here was this had a rising 3 candle formation. So, this gave us everything that you needed to enter a trade right here. If you missed it or you weren't certain, now you've got 2 patterns that we're completing on this. You had a rising 3 method. Market is moving back up. You've got that direction. You expected that. Then you have 1, 2, 3, 4, boom. The 5th session now was a move. Let's say you entered this trade here. Perhaps you entered this trade and you wanted to be able to add to this if it was working. This would be a way for you to be able to do that as well. So here are a couple of patterns that are coming together. And then, as I've taught you on the Gartley buys and sells, there's really 4 to 5 exit strategies that you can take a look at. Number 1, exit strategy is going to be the 0.618 of your A to D move. In this case here, it'd really be your A point to the low of the session. And so that would be the one area where you would take a look at it. Another is going to be the 0.786 retracement of that same move. Another is going to be 100% move of a move out there. And then the other is going to be that this has formed the new A to B equals CD. Your A down here, B here, C there, and then that full extension. Now, that full extension of a 1-to-1 might extend beyond 1-to-1, and that gives you your 5th and final, which would be A to B equals CD. That's more than a 1-to-1 A to B equals CD on the way up. So this was current as of 20, 30 minutes. Well, that has to be more than 30 minutes ago because we started the presentation. Let's say as of an hour ago. Here is and here was the pattern here. I just went ahead and drew in the Gartley buy pattern for you to have and be able to take a look at as well. Here's a rising and falling 3 using the Japanese yen, U.S. dollar, Japanese currency pair. Again, this was making an A to B equals CD here. So during the C to D leg, and let's say that let's say that the market's going to give you your A to B. You see that this is a pattern that's unfolding. You're not in it. Normally, what I do teach you is how to buy and sell the D point, and there certainly is a workshop on that if you're interested in taking as well. You'd have to send me an email because it's not an actual sign-up page, and for those of you wanting to learn those patterns, I really recommend that you would take that. But let's just say that you saw the A to B equals CD unfold here, and you knew about the falling 3 pattern, so you got now a wide-ranging bar, 1, 2, 3, boom, the 4th one on the way up, and you at least knew to identify a projection of 1-to-1 here on an intraday basis was a trade that you could have taken on the Japanese yen. And this is current because this is from yesterday. And now my question to you out there is, can any of you locate the next rising 3 candle formation that's out there? And again, you have to give it just a little bit of room. Maybe, the 2 to 5 day, realize that that's a guideline. So is there anyone out there that can see the next, and I will tell you it's the rising 3 candle formation. Is there anyone that sees a rising 3 candle formation that's out there? Well, I'll show you where it is. What we're taking a look at here is an A to B equals CD down. All right. Well, you actually get a bullish engulfing candle right here. But and if we take a look at the rising 3, well, maybe I'm going to take that back, because it's really not a good rising 3. So maybe nobody answered their hands nobody answered because I couldn't see it. I wasn't. I apologize. I wasn't paying attention. So there's not a rising 3 method out here, and so we'll call that a trick question. So I was taking a look at this candle here, but it's a red candle. So I apologize. How about that? So that is not the rising 3. Let's take a look at a daily chart here on TJ Maxx. TJX is the ticker symbol. So here, TJX in making a move on the way down. You've got the down candle here, 1, 2, 3, 4, 1, 2, 3, 4, 5. You get a close below it, and TJ Maxx gave you a continuation move. So for anybody that was short TJ Maxx, you got your continuation move on the way down. So that was good. We've got Bed Bath & Beyond. Bed Bath & Beyond having a continuation move on the way down. Down candle, 4 sessions inside here, 5 sessions inside this. And actually right here is when you would have gotten the signal. And so this is a continuation move on the way down. So any questions out there? I'm going to go ahead and switch over to live charts at the moment. But if you have a question about this, and hopefully this helps you, just go ahead and type those in on the down at the bottom here. So let's go take a look at the E-minis out here. So on the actually let's start with 20 minutes to. Let's go take a look at our existing trades, and I'll come back to the E-minis. So let's take a look at our existing trades that we have out here. One is short the energy sector. For those of you that have been subscribers for a while, I also use a summation index to identify when markets are getting ready to turn. We were already short the Qs, and the shorts were weak. And so I was looking for something that had not cracked yet. And what had not cracked yet was the energy sector. So I was looking for the energy sector to crack. That is what we had occur yesterday. And now the only thing is that from the time that I identified the trade at about 7 in the morning, and then the newsletter got out at 8. Everything looked pretty good, and then the market really cracked between 8 o'clock and the open of 9:30, and so it gapped down. So those of you that are not in this trade here right now, there's no reason to get into it. But if we just take a look at the existing pattern, because the DUG trade is the trade that is based on the XLE, the energy sector, ExxonMobil, which has not released earnings yet, which is the biggest weighting in there, Chevron, which has, and that has fallen apart. Now, if we take a look at yesterday's action, not only did it gap down, and that gap down was important to let us know that the trade that we were in was moving in the right direction, but we also had volume inside the XLE as it was coming and taking out the B point of an A to B equals CD down. That's this swing point right here. That did 8 million shares, and yesterday there was 15 million shares. Today the volume is a little bit lighter, but more than the B point already, 8.5 million shares. This 15 million shares was coming into, this was the next logical area to find some support, which is the swing point from September 4th, but that only has 8.7 million shares. So coming down into it with volume, again, 8.7, we still have a little bit of time left today. It's coming into that swing point with volume. It looks to me like the A to B equals CD should complete probably on the XLE right around the $68 mark, perhaps lower. We can see the move off of the C to D right now is pretty strong out there. So the trade at this stage looks pretty good to me. Let's go take a look at the SQQQ trade. That is really based on the NASDAQ 100 or the Qs out here. And as we take a look at the SQQQ, though, that is moving up with conviction. We had the conviction a couple trading sessions ago. As this crossed the B point here, that B point on the SQQs had 1.4 million shares and crossed through with 4 million, almost 4 million shares. So 3 times the volume. So that's good. This also should move to the 0.618 area, 45.14. We'll continue to adjust the stops, and that includes also the target. So again, if there's some type of large up move tomorrow, I don't expect that on the SQQQs. If the market continues its downtrend into Friday afternoon or Monday, I don't want to necessarily take profits tomorrow on the trade. So what I will do is I'll just simply have to analyze the trade in the morning, and we'll see what's going on in the futures contract. But I do expect that the SQQQ to get into the $45 level, but could get as high, certainly, as the 48.19 level, the 0.786. That is, we have one more trade that's open. I do like the C-Trip, which has survived, and it's just simply moving sideways. So I particularly liked yesterday's action on this equity. With the markets being down, this wouldn't budge. There was no volume, as you can see, in the move yesterday, and certainly the price to the downside, nothing out there. What we can see on this trade here is we're really close to what? We're really close to a 3 rising method pattern that I just showed, because we had this nice upthrust with volume. This thing has just simply been trading sideways. So if this were to bust out of here, you would have another momentum play where you could add to this position. The caution is that, I utilize and have been including in the newsletter on many of the charts here, the RSI indicator. If you go back a couple of archives inside Celestial Charting, you'll see where I reviewed that indicator for you. So for those that aren't familiar with it, go back and it wasn't last week's or the last previous session, but it might have been 2 sessions before that, maybe 3 sessions before that. So the caution here is I like this moving sideways. You can see by moving sideways what a equity does here is it works off the oversold condition. Once you get above 70, you start getting into oversold areas. You get up into the 80% level, and you can get to really oversold. That's what you saw here as this got up to about 81 back in April of 2011, and there was really quite a correction here. So I'm cautiously optimistic on this trade. We're not that far from our target, which was the low of this high volume area where I would expect this to run into some resistance, which is in the $22 area, and it's at 1978. So looks to me like this is setting up here for one more upthrust, and on that upthrust, we probably will go ahead and exit or really, really, really tighten the stop on that. I did have a request to go take a look at, I'm just trying to find it here, FCX, and we'll go take a look at that. FCX, from a chart standpoint, from one of you that sent in. If we take a look at this stock chart here, so it's trading out at 38.80 right now. Here's the bullish and the bearish signs on this equity here. And so if we take a look at, I'll go take a look at HEK. Thank you. I'll take a look at that today. So this formed an island reversal candle right up here at the highs. That is on September 14th. It's a very bearish candle signal. This also has a number of bullish signals. It has this gap up with volume. So the bottom of this gap, 37.41, which hasn't been tested, is really your support area. This does have, however, a couple of other candle patterns. It has this morning star candle pattern here. This is a support area. So support on this equity, for those of you that are in FCX, is in between the morning star and really this area here. If FCX does close below the 37.41 level, then what this equity would do is come all the way back down and close this window, most likely. But to me, this still looks like a good trade out here. This just may be coming back into the bottom of this support here, which again is going to be the 39.36. This does have some pretty major resistance out here, which was this island reversal. That really was your gap down, and you can see it's been tested and it has held. So this is really in a sideways trading range now from that area of 39.36. $7. 30. I'm sorry, the low was 37 to the. I would say probably up into about the $42 level. Let's go take a look at HEK on this here, and thanks for letting me know that triggered there, Paul. So let's take a look at HEK, and so this came back right to the area where we were taking a look at getting in, which is right here at the top. Now, coming back on a little bit more volume than I would have liked. Still not bad because it's going into that September 4th high. So that has 23 million, and it's come back here today so far with 7 million. So what do we have going on here? You got 3 million. Okay, this could be setting up an A to B equals CD down. That would look like this, which would tell us that this wants to come back and test the bottom here. Trade, so I'm going to have to come down and take a look at an intraday on this here. Well, we have just a little bit of time, so we're going to do this live. Let's take a look at what's going on intraday, and I'm going to first start off with a 10-minute chart out here. Was there any news on this? Let me just switch over to another system. I've got to change my head position, see if I can find some news on this. HEK. All I see is looks like a downgrade out here. So I don't see anything on this. So let's come back and take a look at this high volume right here. Okay. So here we've got a low of 376. I'm going to just draw this line across here. And we've got this, where it broke out from. I'll use a black line there. Let me mark the volume as well on both sides. So the volume coming back into this is really quite light today compared to both of these guys that are out here. So far so good. So it looks pretty good. I'll spend some more time taking a look at this, but on the intraday chart here, my concern is not on the intraday chart. My concern on this now would be on the daily chart. But at least we know what it's doing intraday. So on the daily chart here, my concern is that it's going to close inside this bar with volume picking up and passing this little swing point here with volume. So 7 million shares going against the 3 million shares. So I'll take a look at that. And if you, Paul, let me ask you this question. A trigger today, did you get in or not? And here's what I would say. For any of you that have not entered the trade, knowing that we've got volume passing the B point, what I would do is I would not, you did, okay. So I would say stay there. If you're not in the trade, I would say don't, there's no reason to get in, knowing that the market is, that I expect the market to continue to pull back. At this stage, that's what that would be my thinking on this. On this equity here. I'd have to go, let me go look and see where our actual stop is on this. Let me get back to this. Okay, so HEK, our stop is $3.16, which is going to be below, it's not even below the low of September 4th. I think you're okay. I would stay, well, you know, I'll tell you this. Let's do this. You're in at 376. It's at 373. Why don't you? I would do this. I would take a 3-cent loss, and let's wait. Let's wait to see what happens here, because we're looking for this to reject this, crossing that B point on the daily chart with volume. That's not a good sign. So it looks to me like maybe what this equity will do is come back and test out the low of where this thing gapped up. So that's my recommendation. If you are in the trade, you're talking about a 3-cent loss plus the expense of getting in and out. So that's my recommendation for any of you that are in the trade here. It's 5 minutes to 4. There's not really an easy way for me to get that message out to the other folks, so I'll just continue to assess that trade in the morning. So that's what I would do. Let's see. We're running short on time. You're welcome. Let's go take a look at the ES minis here. Let's go take a look at the Russell 2000. Actually, I want to put up all 4 of these. Let me get rid of this pattern here, because this certainly did not unfold today. And if we take a look at all 4 of the ES minis on a 30-minute chart, each of them had formed a hammer. The most important one was the NASDAQ, because on the Qs, that hammer failed earlier today. That hammer, I'm going to get rid of this bullish engulfing here. Here's the hammer that came in on the NASDAQ at 11 o'clock yesterday. There was some divergence between the RSI and that hammer, but there was no divergence with regard to the directional movement indicator. Substantially, that was out there. That hammer failed at about 12 noon today. Once that hammer fails, that is a sign that the market wants to trade lower. Once you close below it, I don't use that really as support anymore. And so for being short the marketplace, that's really what we wanted to see. Now, not all of the hammers that came in at 11 o'clock have failed. So the Russell 2000 still remains stronger, certainly, than the NASDAQ. The Russell 2000 used to be the weak link out here. It is the NASDAQ. This market will not move higher without the NASDAQ. But the Russell 2000 is showing some strength here. The hammer here on the ES Mini that formed at 11 o'clock, that is being tested as we're coming into the close. The Dow, that hammer here now just failing on the 30-minute chart as we come into the close. Of course, the session's not over just yet, but that hammer here is failing. So we've got 2 failures out here. We might have 3 on the ES Mini. And what we continue to notice is that it is now the Russell 2000 that looks to be the stronger of the, from an intraday standpoint, of the charts. And what we will do when we do flip positions to the long side is we'll go with whichever is showing the strongest patterns out there. And on the intraday chart here right now, it is the Russell. So is there any other questions that you have out there? And as always, feel free to email me or simply go ahead and give me a call at the office. I see a question out here about Schlumberger, head and shoulder on Schlumberger, SLB. Let me put that up here real quickly. And on Schlumberger, you're looking to go short, Glenn. And if you're in the DUG trade, we already are short. We already are short Schlumberger. I think it is the fourth or fifth percentage holding inside the DUG. Okay, so because we're already short the actual ETF or index, I wouldn't be looking to. Personally, I wouldn't be looking to add to it because it already makes up a pretty significant weighting inside it. It was ExxonMobil that gave us a bearish engulfing candle right here. This is on the day here when I also noticed that the summation index had just turned down. We also had at that stage we had a divergence. In price was moving up, but the RSI was moving down. Had the bearish engulfing candle, had a tick down in the summation index. The ExxonMobil had still not cracked on the way down, still hadn't really broken a swing point. I suppose here's now a swing point. 9 million shares yesterday, 14 million shares. So we've got our first crack here in ExxonMobil. So we're already in essence short Schlumberger, ExxonMobil, Chevron, and a number of others that are part of the DUG out there. So, folks, thanks so much for attending. Have a wonderful afternoon, evening, and I'll look forward to speaking to you again soon. Take care. Bye-bye now.